years from now could be much higher, simply as a consequence of the declining value of the dollar.
What are your thoughts, since we've covered oil here, on natural gas?
Well, natural gas is very interesting, and I think we need to segregate that market into an international and a U.S. component. In terms of the international component, I think it'll be surprisingly strong. Natural gas is in oversupply worldwide right now, despite what you read about temporary or spot shortages in Europe as a consequence of very poor Russian export infrastructure. But the world is building liquefied natural gas capacity at a breakneck pace, and this is very important because increasingly liquefied natural gas will function as a crude oil substitute. And you know my views about crude oil, and I think that there will be an increasing role in natural gas to even out the shocks associated with spikes in the crude oil price. In the United States, the situation is very, very, very different. The United States has, for once, absolutely world-leading infrastructure in natural gas, storage infrastructure, transmission infrastructure, liquefied natural gas import infrastructure, and, as a consequence of technologies, abundant supplies of natural gas as a consequence of the new investment in the shale gas plays. Now, this is very important because as the grid in the United States becomes increasingly fed with interruptible alternative energy supplies, particularly wind and solar, we are going to need the ability to generate electricity in peak demand times when solar and wind aren't available. And the energy source that we're going to use, because coal and nuclear are both currently politically unacceptable, will be natural gas. It is going to be natural gas that saves the United States in an electrical generating point of view as a consequence of the enormous existing infrastructure that we have in place and the enormous reserve and resource base that we have in the United States. I think that this is the time to look at selected U.S. gas producers because what everybody looks at right now is this big, big, big supply bubble building up as a consequence of these shale gas plays. And people don't look at the fact that natural gas, because of this supply and because of this wonderful infrastructure that we have, is going to play an absolutely vital role in the United States energy future. You know, one of the things that you learn if you invest in the natural resource business for as many years as I have is that the very, very, very best cure for high prices is high prices. And the very best cure for low prices is low prices. As a consequence of low prices and abundant demand for natural gas, we are building natural gas consumption infrastructure that will guarantee very strong revenues for producers for years to come, at the same time that it generates very, very, very reliable electrical power for consumers like you and myself. Conversely, when the natural gas price or any other price spikes high, two things happen. Conservation kicks in and people learn to use less, and producers produce more. So it's very important for both consumers and investors in natural resources to understand the simple maxim that the cure for high prices is high prices. The cure for low prices is low prices. Markets work. Congress doesn't understand that, but the investors and consumers who listen to your show need to.
Let me ask you also about agriculture, because we are in this positive agriculture cycle, and as you mentioned to me before, it's a long cycle, rather lengthy, is it not?
Boy, it sure is. We have underinvested in agriculture in a global basis for about 40 years. The consequences of the Green Revolution, which really happened in the 50s and 60s, were rising lentil and grain pulse yields around the world. And as a consequence of that, and as a consequence of increased trade and infrastructure for shipping agriculture, the percentage of the average American household budget that is devoted to food has fallen from over 30% to about 15% in 35 or 40 years. That's absolutely incredible. Now, people complain about the high cost of food relative to what they paid 30 years ago, but they need to think about the food price in the context of inflation. As we were discussing earlier, when I was a young man, pathologically cheap as I was, I frequently stayed at Motel 6, and I stayed there because I could get a clean sheet for $6. I passed the Motel 6 on my way to the airport to fly down here to New Zealand, and it said Motel 6, room starting at $69. what that $6 to $69 progression is about has nothing to do with the greed and larceny of the people who own Motel 6. It has to do with the impact of inflation on the purchasing power of your dollar. If you paid $1 for an item 30 years ago, and you pay $3 for that item now, it is 3 times as expensive in nominal terms, but it's much cheaper in real inflation-adjusted terms 30 years hence. And what happens when people look at food prices is that they think in nominal rather than in real terms. In real terms, food prices are an absolute bargain. But food prices are going higher, and I think substantially higher. They're going higher because the low-hanging fruit in terms of technological evolution of agriculture, the Green Revolution, has already been harvested. They're going higher because there are more people in the world. There are 6 or 7 billion people in the world. And increasingly, the number of people in developing countries who can afford better diets is increasing. As those incomes increase, those people are more able to afford the lifestyle that you and I enjoy, and hence they compete with us for various goods, particularly agricultural goods. I see on a global basis the ability to convert new land to agricultural land declining, even as demand is increasing. I see increasing strains on water resources on a global basis. And I see a decline in the growth of yields per acre on a global basis. I don't see a decline, by the way, in yields per acre. I just see a decline in the growth of yields per acre. So I suspect that agricultural prices in the 5 to 10 year time frame will do very well. In fact, I think that agricultural minerals, and water will do extremely well in the next 20 to 30 years.
Let's move on to gold and silver, because I know in the short term you think there could be a pocket of weakness that could develop, but over the longer term you're bullish. Can you elaborate on that?
Yeah, I'm very bullish. I can't tell you why this is, but I can tell you that for, 3 or 4 or 5,000 years, for some reason, spontaneously, cultures that had no connection with each other viewed gold and silver as desirable goods, as mediums of exchanges, and as places to store wealth. In India, this was true. In Europe, this was true. In West Africa, this was true. In Peru and Mexico, this was true. Cultures that had no connection with each other independently came to the point of view that both gold and silver, although particularly gold, were valuable as adornment, were reliable medium of exchange, and good stores of value. So this is something that mankind has believed in really since the dawn of civilization. And it's unchanged today. A piece of gold, a coin, if you will, is a financial asset to you while it's not simultaneously somebody else's liability. A piece of paper, a piece of currency, a U.S. dollar, a euro, is really an IOU. It's an asset to you, assuming that somebody will honor it. But it really constitutes a liability on the part of society. Gold isn't that. It's merely an asset that gets transferred. The fact that it is an asset that isn't simultaneously somebody else's liability who could default is extremely important, because every major currency in history has always lost value. They can be conjured up from nothing, which means that, if you will, the sins of overconsumption can be socialized, where that can't happen in the part of gold. So I'm attracted to gold in some measure philosophically, like the good old-fashioned gold bugs. I am also attracted to gold because it's functioned throughout recorded history, if you will, as catastrophe insurance. I don't own very much gold in my own portfolio because of greed. In other words, I don't own it necessarily because I think the price is going to go up. I own it because of fear. I own it because it is catastrophe insurance, and it is, to me, a financial asset that I can own that isn't simultaneously somebody else's liability. And I am afraid, looking forward, that I want to increase my personal exposure to catastrophe insurance. I think the possibility of political upheaval, social upheaval, and certainly economic upheaval is very high on a going-forward basis. The second reason that I think that gold will do increasingly well over the next 5 or 10 years is that I think